Financial update for December 2024. So the Fed had its meeting on December 18th. The Fed decided to cut its interest rates for overnight borrowing by 0.25% as predicted in the previous video. Target rate is now 4.25% to 4.5%. This will start to affect short-term interest rates. Long-term interest rates are more set by like the 10-year Treasury. So why did the stock market drop 3% roughly in a day? Well, the FOMC Press Release came out, and they said unemployment rate has been moving up but remains low. So that's a concern. Inflation remains somewhat elevated. So to combat inflation, you raise your interest rate, but when you raise interest rates, people tend to get laid off. The dual mandate of the Fed is you want to have maximum employment. They also want to have stable prices. This is a target of about 2% inflation. Some inflation, just mild inflation, is good. In general, people like to get paid a little bit more each year. They want to see the value of their home increase, things like that. So some inflation is somewhat helpful. It also helps inflate away some of the debt that we have. If inflation starts heating back up, they're going to have to raise the interest rate to make sure that they can get stable prices. When you raise the interest rates, what happens is people don't borrow as much money, people don't buy things as often, which means less things have to be produced or less goods and services, which means there's less people that you need to run in that economy, which means people get basically laid off, which then the unemployment rate goes up. So that's the downside here. So that's why the stock market was freaking out a little bit, as well as they made the statement, the economic outlook is uncertain. Stocks don't like uncertainty. They want to know what's going on. Uncertain situations, people freak out and panic. They also said expect a pause in rate cuts, and basically we're looking at maybe only 2 in the next year. Basically, they're worried about the inflation rate going up. So they can't drop the interest rate further if inflation is a risk. The other thing that's occurring right now is the US government has a potential government shutdown. Basically, we're going to exceed our debt ceiling in the near future. Then the government can't pay employees and certain debt obligations and things like that. So that's also a panic. I don't really get worried about this because I've seen multiple shutdowns. Effectively, they just pay people back pay that weren't being paid during the shutdown, and really nothing happens. This just keeps going up multiple times a year sometimes, and it's gone up hundreds of times over the history of the United States. So not worried about any specific government shutdown. There's always threats of this. So not really a big panic. This is more the concern. Basically, if inflation starts ticking up at the same time unemployment starts going up, they're going to have to make a decision, and likely they'll have to increase the interest rates to keep inflation low, which will mean people will suffer, won't be able to pay their bills, and then basically when people can't pay their bills and they're not being productive, the GDP falls, and then you have 2 negative quarters of negative GDP and lots of unemployment. That's a recession. If you like financial topics, you want to learn how to be an entrepreneur, how to save money on taxes, how to make more money, this is a channel for you. Please subscribe, and thank you for watching.